Necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, American Family Radio. My name's Dan Celia. It's great to be here. Ann just put a little message up on the board and said callers keep calling in and saying keep up the political rants. So Devin made some good points just at the break that I won't share, but some good points about maintaining our direction and our passion and our feelings. But anyway, I appreciate all those callers that called in. Thank you. That's an encouragement. Anyway, let's take a quick look and see what the markets are doing, and then we're going to get back to the phones. Let's just see what we have here. I don't know why I lost my screen. Anyway, the markets. No, this can't be right. That can't be right. There you go. That's better. Markets are in positive territory. The Dow's up 54 right now. So all the markets in positive territory. So that's some good news. We're getting very mixed results in earnings reports. There's a lot of retailers reporting. And from what I can tell, between Tuesday, Wednesday, Thursday, so far, it looks like I'm just going to make a guess here. And I will look at this, and probably not a lot of people care. I care. Because it's important as I think about the consumers. But it looks like the retailer stocks are suffering. And the retailer stocks, it looks like we're going to have more retailers with some poor earnings reports than we are good ones. So we'll watch that. But very, very interesting to me because it says something about the broader economy as it relates to consumers and consumer spending. This is a good time for retailers. They got all the back-to-school stuff, so we'll probably see that pick up. You're listening to American Family Radio Financial Issues, 866-300-9298 if you want to weigh in. Let me go to Dennis. Dennis calling us from Mississippi. Hey, Dennis.
Morning, Dan.
Good morning.
You keep up the political commentary. I like it.
Thank you, Dennis.
No, I had a question. I've got Kroger stock in my 401k. That's basically all the stock I've got right now. The rest of it's in cash.
Okay.
But back when, everything failed, I went from like 22 down to 16. And it's come back up, and I've been kind of watching it. It got up to almost 40. And I've noticed it this morning. It's dropped down to just a little bit below 39, I believe.
Yeah, 39.24 right now.
I was just wondering if maybe I ought to sell some of it. I just don't know what the markets are going to do right now, whether they're going with, if Bernanke does what, you think they are, whether that stock may suffer.
Yeah, how far away are you from retirement, Dennis?
Well, I'm disabled.
Okay.
And
I assume you worked for Kroger at one time?
Yes,
okay.
I worked for him for right at 30 years before I had an aneurysm, ended up taking medical retirement. And I have a small pension coming from Kroger, and then I've got my Social Security disability. And I'm just trying to get a little guidance on, whether I ought to sell some of it off and maybe get back in on something later on.
Well, I'll tell you what. I mean, how much percentage of your portfolio there? What's the percentage of cash? Is it 50%?
It's probably about 50%. I'm probably 50 in cash, and the rest of it's in Kroger stock.
Yeah, I'll tell you, Dennis. Kroger is a company that I've been researching for the last 4 quarters about adding them onto my list, and they've only got one. So let me just say this. They're a very good company. They're a well-managed company. They're doing very well. By all accounts, they should have a good next 3 or 4 years. They pay a 1.5% dividend. It's not a whole lot. It's better than what you're getting in your cash. I wouldn't be a seller. I mean, I don't feel good. If the market comes down as a result of what Bernanke's going to do, it certainly is going to bring, when the tide drops, it's going to, all boats are going to get a little bit lower. But I think Kroger is one of those stocks that is likely to come back up a little bit quicker once the knee-jerk reaction of everybody selling is over with. They're a well-managed company. They're poised for growth. And again, I'd probably keep it. I'd probably not sell here. So I think you ought to hang on to it. I mean, the last 5 days or so, it's been coming down a little bit almost every day. It's still up year to date, well up into double digits. I don't know what the number is, but it's way up into double digit growth for the year. So I'd like to see you hang in there with it. Since you have that 50% in cash, if you need some of the money out of your 401k, you've got that cash that you're going to draw from first. So, I feel pretty good like you'll be able to leave this alone. If it does dip down, you'll be able to leave it alone long enough to see it recover. And I just feel pretty good about it. I would say at the end of the year, if it's at 40, 45 in that neighborhood at the end of the year, then I'd probably sell some of it off. But right now, I'd probably hang in there. And if you do sell some of it off, it would be okay to sell 10% of it, but I wouldn't want you to sell any more than that. Add that 10% to your cash, because that would be taking some of your profit off the table, and that might make a little sense.
Well, that sounds great. I've been torn between that. I just didn't really know what to do. Usually when they go down, like you said, they're pretty quick on coming back up.
Yeah, and they always have been. They always have been, right? I mean, you know that. You're watching it, yeah.
Yeah, well, I'm kind of thinking, usually if they get up in the high 40s, they start talking about split.
Yes. Yeah, once they stay up there for a little while, and that's a good thing. That'd be a good thing.
I appreciate your input on it, and that kind of settles my mind a little bit.
Good. I'm glad. Well, I appreciate, Dennis, I appreciate you calling in, and I'm glad that settles you a little bit, and I think I'm glad you called. It's a good thing. Just hang on to it. I think you'll do fine. Let me go to George. George calling us in North Carolina. Hey, George.
Good morning, and thank the Lord for your ministry up front.
Thank you.
I'm listening to you enough. I'm 69 years old. I'm still working, and I've got some money that's sitting in a credit union, drawing 0.5%. Is there anything out there that where I can go get more than 0.5%?
Well, you know what, George? There's nothing out there that you can get more without taking some risk. So the real question is that you have to answer is how much risk am I willing to take? So if it's money that you're saying, I don't care about, I don't care, if it dips down, it dips down, that's fine. I got plenty of time. I don't need the money. I'm not going to withdraw the money to live off of in my retirement or supplement my income. I just want to leave it sit and grow. Then that's a different story. If you need some income, I would probably suggest maybe you consider doing something like a charitable gift annuity for the portion of it and increase your monthly income so you don't have to worry about the markets. Then with the balance of it, you can be a little bit more risky. So if you want to preserve principal, preserve what you have, not take a lot of risk, then unfortunately there really isn't anything. But I will say this to you. I do believe that we're going to see CD rates, interest rates on money market accounts begin to creep up. I don't know if the end of the year we see a 10-year note in and around 3%. It's down a little bit today, but I'm thinking that the bond yields are going to be going up. If we see that at some point in time, we're going to start seeing some interest rates on money markets and CD rates go up. So I would hang in there, But if you're willing to take risk, there are a couple things. So let me just give you one quick example, George. If you've got, $100,000, if or $1,000, same deal from a percentage standpoint. If you've got $100,000 sitting there, it's sitting in cash, not doing anything, it's not earning any money, but you're preserving the principal, that's a good thing. And you're thinking, well, I might like to take a little bit more risk. Then I go back to what I said earlier. Peel some of it off. You do a charitable gift annuity. You get a permanent income that is going to help supplement your income. That's going to allow you with the rest of the money to be a little more aggressive, because now you've got this other piece of income coming in, small piece of income that's supplementing your income that is not subject to market change. It's never going to change. If you live to be, 169, it's not going to change. So I would look at something like that. That's a way to be a little bit, you can take a little bit more risk, have a little bit more opportunity for growth, but at the same time, you don't have to be looking at this pot of money that is taking, that maybe owns a few stocks and be so concerned about it dropping down. So I don't know if that helps or that makes sense to you. I hope it does.
Yeah, it does. And the one thing I didn't put into the equation, I'm not going to need this money for 6 to 9 months, but somewhere in that 6 to 9 month period, I'm going to need it to buy a house. So that,
okay.
I think I should throw that in the equation up front.
Well, yeah, that changes everything, George. Then, it's just sit tight. Just sit tight. Yeah, do nothing.
All right.
All right.
Thank you for your help.
All right, George. I appreciate the call. By the way, folks, that was George from North Carolina. We're going to North Carolina in our town hall meetings. First time. We've never been in North Carolina to do a town hall meeting. So we're excited about that. We're going to be in Fayetteville, North Carolina. You can check afafoundation.net. You can check financialissues.org, and you'll see a list of where we're going to be and when it's going to be. But we are going to be in Fayetteville, North Carolina here within this fall. This fall, we're going to be going there. So we're looking forward to that. Let me go to Marty. Marty's calling us from Arkansas. Hey, Marty.
Hey, Pennsylvania Dan. That's my new name for you.
Okay.
Hey, my wife and I are both. She's in 100% in the money market right now. She's getting a guaranteed 3%. So of course I'm not. But I've got a few individual stocks, and the rest in the money market. Should we still hold tight, or do we need to hang on? We're both in our late 40s.
I would say she needs to get a little exposure to the markets. I wouldn't do it right now because I think we're probably at the high for the year or very close to it. So I don't know that I would do it now, but I would start thinking about it. One of the things that you want to do is start thinking about weaning in at some point in time with a couple of good, solid companies. But you've got to have a little exposure. You're just too young, and I know, it's volatile, could go up and down. Yeah, but, when you look at when you're going to need this money, so let's just say it's 20 years out, I think you'll be fine. And I really would like to see you get a hold of a few good, solid companies, either companies from my buy list or, some companies that maybe you know of that you feel okay about. But I'd really like to see you do that. And with her money, you already have some. What you might want to look at, Marty, with your stocks, if they're stocks you like, you feel like they're good, strong companies, you might want to look at adding to those positions. If they do take a dip, you might want to do that. But you got to have some exposure. I think it's great that you've been protecting your principal. That's good. But I think it's time to take a little bit of risk with some good solid stocks while keeping the majority of what you have in money market. Okay?
All right, Dan. Well, that sounds good. I appreciate it.
Okay. Thanks, Marty. Anyway, let's get back. Oh, you know what? We're going to break. Jeez, I lost track of time. Anyway, you're listening to Financial Issues, 866-300-9298. 866-300-9298. We'll get back to the phones right after the news. You're listening to American Family Radio, Financial Issues. And again, 866-300-9298. I'm Dan Celia, American Family Radio. We'll be right back after this.
American Family Radio, AFR Talk.
The AFA is a nonprofit ministry that was formed with the mission to inform, equip, and activate individuals to strengthen the moral foundations of American culture and give aid to the church here and abroad in its task of fulfilling the Great Commission. Your help is vital to continue that mission. To give, go to afa.net and click on Donate, or text a $10 donation when you send the letters A